Good morning. What's up, people? Hope you're all doing well. It's Wednesday, September 18th, the day that everyone's been waiting for, the day that I've been waiting for months, it would seem. We got Fed Day, big Jerome Powell Day. Uh, let's go over that. Uh, this is the. I'm just trying to load the probabilities right now, but this is the first time that we will see a Fed cut. Well, based on the expectations, the first time we're going to see a Fed cut since 2020, March of 2020, when we had that COVID drop and they decided to slash. I think it was like 150 basis points in a matter in 2 weeks of 2 weeks, something like that. After three consecutive cuts before that. So this is the first cut that we've seen in 4 to 5 years. The last time we saw a cut cycle was 5 years ago, so August 2019, I should say, August 2019. So this is a big deal. This is a big deal. We got the first cuts coming out. 63% chance of a double cut, meaning 50 basis points. 37% chance. Do I have dyslexia? 37% chance of a single cut, 25 bips. And we're coming into it. So this afternoon, we're going to have volatility, movement, rockets, downside, whatever it might be. Realistically, it's hard to estimate where the market's going to go based on the cut information itself. But all I know is that yesterday, there was a lot of big selling going into the latter portion of the day / into the close. So it seems like some big positions, some larger traders were either getting risk off or preemptively selling into this, expecting some kind of downside momentum. Now, my personal opinion, my only opinion here is that this could start a little leg to the downside, right? It comes together with seasonality. It comes together with the fact that they're cutting very aggressively, seemingly late, right? They're on their 2% path, whatever it is. But I think that if we do get a pop before the FOMC, there could be a little downside pressure that comes from that. So I'm not going to live and die by that. But I'm looking at a lot of big positionings that are repositioning to a bit of a downside move. The last time that we saw cuts, remember, the past movement doesn't necessarily indicate future movement. We all know that. But the last time that we saw the cuts in 2019, the first two cuts resulted in two consecutive 6% downside moves in the following days. So we could see something of the sort, right? I'd expect a little more weakness in these markets from these territories leading after the Fed, right? Which I think into the end of the year could rebound realistically. But I am looking at this as a potential sell. Now, we'll see how that shapes up. We're going to trade this with our team in the afternoon. And generally, the first move, we have a little strategy behind it. The first move is the expected move throughout the Fed event. But let's see what we got cooking right now. So the cut cycle is technically beginning today, right? Like I said, it's been about 4 years since the last cut, and 14 months of holding them steady. So we haven't seen any change in the last 14 months. There haven't been that many Fed events. Like there haven't been 14 Fed events in the last 14 months. They've skipped a few months, but over the last over a year now, right, we've seen same rates. So today's rate decision, press conference, and policy projections will all be a pretty big deal. So I'm a little giddy. So there's much a debate over how fast the Fed will move as the starting gun is fired. We'll see what the dot plot projections look like. We'll see what they say, right? They could give a little bit of an indication of how quickly they're going to continuously cut rates. And everything is going to take place at 2 p.m. Eastern today. So inflation data has drifted downward towards that 2% Fed target. Unemployment has risen faster than expected since the last FOMC decision in July. And that has led to many worries by the central bank about cooling labor market conditions, which is harder to stop once demand for workers has softened. So it's even prompted to talk about a stronger level of rate cuts. But the majority of Wall Street is seeing the expectation for, or I guess like the Fed's funds futures, the expectation, like we just mentioned, for a double cut, right? A higher probability is placed on the double cut. So while the pace of the initial cut will be revealed in the coming hours, a bigger area of focus will be the Fed's funds rate at the end of 2024, next year in the longer term projection, meaning the dot plot. So in the last summary of the economic projections issued on June 12th, the median Fed projection was 5.1% at the end of 2024 and 4.1% for 2025. And how much that changes from the prior outlooks will exponentially be important for investors. And I think it's going to be a drastic change, honestly. So we'll see how that shapes up. There is a lot of anticipation, right, for this potential cut cycle. Realistically, a lot of people have been overlaying different graphs in how it's affected prices in the past, so it's going to be something of interest to look at. Generally speaking, in the months following, right, in the year following, there is downside in the overall market after a Fed pivot starts, so that's a big factor that a lot of people are looking at. Now, short-term bullish bearish, it's going to be a little harder to kind of decipher until we get that move and momentum. And I'm looking at this, and it seems like repositioning is a little more to the downside. So in terms of other news, AI infrastructure, right, looking to meet growing demand. BlackRock and Microsoft are planning a more than $30 billion artificial intelligence investment fund to build data centers and energy projects. The Global AI Infrastructure Investment Partnership would be one of the biggest investment vehicles ever raised on Wall Street through Global Infrastructure Partners. Abu Dhabi-backed investment firm MGX and Microsoft are the fund's general partners, and Nvidia is providing expertise. So the funds aim to mobilize up to $100 billion in total investment potential, including debt financing. Some big stuff. So AI back in the spotlight, right? We haven't heard much of it. The growth from this year and even last year in AI has pretty much made headlines almost every day until fairly recently, right? Nvidia took a little slip and everyone just kind of forgot about it. So big news, realistically, is going to be centered around the Fed, and we're going to see how this kind of shapes up, right? The expectations, we could even look at expectations for the future. What is it? Shit. So you can see what the expected, like what the Fed's funds futures are kind of pricing in for the following months into the end of the year. Yeah, a little comment here. Fed will raise interest rates after CPI inflation. In my opinion, in the future, funds rate will go up and a hike will happen soon. I find that fairly unlikely, but it's a possibility, I guess. As long as they keep inflation slowly grinding lower, they're just going to cut preemptively before the market takes a shit. So, like, if we look at these Fed's funds rate, like for November is the next meeting, so we skip October. Come on. So November is pricing in another 25 bips realistically. The majority of the chance, right? If you group these two together, you've got about 70, well, exactly 78% chance that we have at least one more cut in November, at least, right? Obviously, a lot can change until then. And then December, by the end of the year, the last Fed meeting, the expectations are rates to be at least between 450 and 475. So the expectations looks like probably one more cut by the end of the year as things shape up. Obviously, this can change a lot based on what happens today. This has changed. So apologies. The expectations are between 1 and 2 cuts by the end of the year to add to the 2 right now. So the expectations are to be between 4 and 4.5% by the year end in terms of the Fed's funds rate based on right now's information. So we'll see how that shapes up, but I could see a little downside trying to shape up from this Fed. I don't want to live and die by that. It's just an opinion based on the information that I've collected here and the selling that has happened from yesterday. We'll see, obviously, pre-FOMC how that shapes up, but most likely not going to have too much movement before the FOMC, so we got to just keep that in mind. I don't want to get too aggressive, trade like a billion times realistically before that happens, right? There might not be too much of an opportunity, but right now, as long as we're under 5710 region, the expectation is for prices to hold the balance to the downside. Anything above 5710, we could inch a little higher. I just expect slower movement and kind of chop until the Fed comes out. This is a pretty big event, right? It's a big event that a lot of people are anticipating overall. And realistically, what we got cooking is the first cut in 4 years. So I don't imagine there's going to be too much positioning before the Fed. So I think that a lot of people have repositioned yesterday, and they're just kind of going with the flow with whatever happens here today. They're going to position as it comes out. So with that being said, let's open up our room today. I'll see you guys all tomorrow after the Fed and the movement, the expected volatility. Maybe we hit a new all-time high, maybe we don't. So no need in preemptively trying to guess the direction, and we'll wrap up what the Fed did tomorrow. So take care, everyone. Let's open up the room.